Well, budget is an important aspect for any business, and we do purchase, sales, production, labor, cash budget, even trade receivables budget, trade payables budget. Ultimately, we do master budget using all these budgets, which is basically income statement and statement of financial position. Let's do one income statement budget. Let's go over this worked example. This is a situation when Jane Slater runs a business. Year end is 30th June 2017. Look at the sales given and the units given. It's better to do 180,000 divided by 12,000 and get sales per unit. Opening inventory given, purchases. So this purchases divided by 13,000, we're going to get per unit. And closing inventory. These are all costs, so it's going to give you the purchase price. Cost of sales, sales minus cost of sales, gross profit. Then wages given, general expense, rent carried out per unit given. So 12,000 units we sold, that's 12,000. Depreciation given. If you take with the expenses, you get profit of the year or operating profit. So there are some, it is an incremental budget example. There are some adjustments given. Jane is in the process of preparing her budgeted income statement for the year ended 30th June 2018. Jane is going to do next year budget, and the following changes actual results above for the year ended 17. So based on 17, we're going to do some percentage. I can see should be up and down, and then we're going to do a new budget. Before I read, I'm going to do the bit of calculation. As I told you, 180,000 divided by 12, 180,000 divided by 12,000, you get 15 sales per unit. So then again, I'm gonna do 91 divided by 13,000. 91 divided by 13,000, I get 7 per unit of your purchases. And remember, closing inventory for this year becomes opening for next year, 2018, right? These are the basic things you need to keep it in your head. It's good to read the requirement. Prepare the budgeted income statement for Jane. Yes, we're going to do budget income statement. And let's read the calculations and the requirements. Unit selling price to customers will be increased by 8%. What is the unit selling price? 15. Yes, and they said 8%. So 15 times by 0.08. 1.2, so we just add 1.2, which is 16.2. Nice and good. Yeah, the first one is done. Hold on, this is expected to decrease the number of units 4%. How many units are there? 12,000. It goes down by 4%, so 96% available, isn't it? Yeah, either way you do, you get the same answer. 12,000. I'm going to do 12,000 times by 0.96, so 1150. 11520. All right, so that many number of units you're going to sell next year at the rate of 16.2. Yep. Well, good. Unit purchase price will go up by 50 pence. How much it is now? 7. So it's going to be 7.5. Be careful with these information highlighting for you. Yeah, 1, 2, 3. We've got 3 information already. The number of units closing inventory will be reduced by 10%. So how much is the closing inventory? 3,000. If it goes down by 10%, which is 300, so 2,700 is going to be the closing inventory for next period. They give you. They told you that's how you got to do. Wages are expected to increase by 2%. Here is your wages times by 102%. If I do, or just do 2%, add with this 6,000, you're going to get the same answer. How much it is? 6,000 times by 102% equals to 6120. 6120. These are all for next period, right? What else? General expenses, because of efficiency, are expected to fall. Good news. 10%. General expenses are these. If it goes down by 10%, so just multiply by 90%, you're going to get your answer. 5500. 4950, right? Yeah, 4950. All these going to go to the next period, 2018 income statement. Rent for the year will increase to 6,000. So from 5 it becomes 6,000. All right, and carriage out will increase by 10%. So if you do 10% of this, 1.1 it's going to be, isn't it? Yeah, and 1.1 you multiply with the number of sales unit, this. So let's do it even. 1.1 increase by 10%. And how many units we sold? 11520. So 12672. 12672. All these I'm highlighting because we're going to take it in the next period. Let's see, carriage outward increased, and depreciation will be this. Instead of 4,000 it's going to be 3,600. That's it. Boom boom. I don't see anything else. You just take all these items. Oh, hold on. Purchases. Now this closing 3,000 becomes opening, that's all right, and we got the closing for 2018, which is 2,700. How much is the purchases? You know, let's work it out. This is an interesting one. Opening inventory plus purchases less closing inventory. Opening inventory is 3,000 units. You agree? And how much is the sales? You need the sales information as well. Sales. You have a sales of 11520. 11520. And purchases we don't know. Less closing inventory. Or closing inventory is 2,700. This is a bit of incomplete record. Yeah. Now the budget says if you'd like to sell, let me do it all over again here. If you would like to sell any item, you need to produce, you need to purchase, don't you? So I need to have 11520, don't I? Plus, if I would like to have any of the items in my closing inventory, I need to produce or purchase it, don't I? Closing inventory. So 2,700, I need to buy it. Any item you have already in the opening, do you have to produce or buy it? No, rather you need to minus it. Opening inventory was 3,000 items. So you need to do this calculation. 11520 plus, hold on, plus 2700 minus 3,000, and there we go, 11220. 11220. That's your purchase, people. That's your purchase. That's how you do the purchase. Let's reveal the answer. How do you do it? Here we go. 11520 at the rate of 16.2. That's your selling price. Opening inventory. There is £7. Or just copy paste. Here's the purchase. We have worked it out just now. 11220. Here we go. Yeah. And what is the purchase price? 750. No? You multiply with that, you're going to get your answer. And closing into 2,700 at the rate of cost price. Do remember that. And that gives you a cost of sales. Sales less cost of sales, you get gross profit. And then all these, we already worked it out. Expenses minus, you get profit for the year. And that's how you do incremental budgeting income statement. Hope it helped, guys.